Hello everybody, how's it going? Good morning, good evening, good night, depending where you are in the world watching this stream right now. Could I just get a audio and visual check in the Zoom chat as well as the YouTube chat before we get started here? Everything's good. Just before I start rambling off too much, you know what I mean? Making sure everything's good. You guys should be able to see the live breaking news to the left of your screen, and right now just gold as well as the Zoom chat here, and obviously you should be able to hear my voice. So before we get into it, let's just go through all of the nitty gritty for anybody who is new to these streams, or for anybody who has the memory of a hamster and forgets everything every single week when we do these streams. So make sure you guys first read out all the information on the layout itself on the YouTube, on your YouTube screen, as well as make sure you take the time to read the YouTube description as well. I'm also going to put these stream reminders, a little graphic, right on top of your screen now. So the layout of this stream and the format I usually like to follow is we provide analysis and intraday and scalp trade ideas across gold, GBPJPY, GBPUSD, Euro USD, USD CAD, and US 30 using fundamental and technical concepts. This is not direct financial advice, but you can feel free to ask questions about technicals and fundamentals. But understand that I go through my own process of doing analysis on these pairs in that order I just told you. So please have the patience as I'm doing that, not to jump ahead or start to tell me to start looking at 10 other pairs, right? We need everyone in here when we come into this trading pit to be lions. All right, I don't want a bunch of horny ass, stupid ass hyena vultures in here. Hyenas and vultures, they only eat scraps. They get no respect in the animal kingdom. But lions, they get the most respect. They're known as the king of the jungle. And if you ever study how a lion hunts, the majority of time, lions spend their time resting, conserving their energy, planning their attacks. Then they plan their attack with their pride and use the most amount of energy needed for that specific hunt. You get what I'm saying? Any questions about the Capital Hungry private service, just go to capitalhungry.com. Make sure you follow all of the Capital Hungry free resources. Okay? The Capital Hungry News Twitter, free Telegram analysis channel, and this YouTube channel itself, as well as the BitClout page. And for anyone who is wondering, all of these streams are always saved and recorded, so you can always come and rewatch them, backtest any information, go fact check anything I tell you guys, or you know what I mean, check if I gave any wrong information or bad trade callouts. You can always go back and watch any of these streams. But here's the Capital Hungry News Twitter. You can see it right here. It posts tons and tons of free news headlines throughout the day. Websites like Forex Factory and other retail news websites, retail trading news websites in our community sourced from the Capital Hungry Twitter page. It's not as many or as accurate headlines as the news terminal to the left of your screen. That's just for the private members. The Capital Hungry YouTube itself, where I just posted a higher time frame analysis on Euro USD, different psychology webinars, different trading session webinars, market updates, you know what I mean? Tons and tons of free information, value, and information that's actually going to elevate your life rather than just deteriorate your brain. And then the Capital Hungry free Telegram analysis channel. All right? Just wanted to get that nitty gritty out of the way because people always ask whether you're new or you got the hamster memory like we're talking about. All right. And before we really jump into the meat and potatoes, which is doing the analysis and looking for trades to take, which gives everyone the boner and fucking, you know what I mean, makes them way too horny. Don't forget As a manual retail trader, your job is not only just to keep taking trades and being in and out of the market. Your job is not only just to constantly hunt and be looking for profit. You also have to focus on the risk management side, the math and probability side, as well as maintaining control of your emotions. We have to stay as emotionally neutral as possible. We can't let that dopamine hit and greed of when we make profits control our decision making, and we can't let those vengeful feelings and feelings of anger when we lose dictate our decisions either. So make sure you always follow your trading plan, and at least okay, let's be real. Most of the guys in the YouTube chat don't even have a trading plan. Hopefully you guys can go at least make a trading plan. Once you make your trading plan, start following it. Also create a risk management plan and start following that. Focus on the long-term vision and long-term gains rather than short-term satisfaction and short-term desires. Try to stay as emotionally neutral as possible, and these simple psychological tips will prevent you from crashing your account if you actually practice them. All right? So those mental reminders, I'm even going to flash it for the YouTube audience just to give that extra tip. Now, we do have some economic data reports overnight. At 2 a.m. Eastern, we have both the UK GDP of the monthly, yearly, and quarterly. This is something we are going to actively watch the release of this report at German market open at 2 a.m. Eastern, because GBPJPY is at a very, very significant price point when we're looking at the pullback it's done for the new quarterly candle. And if this data is good, which I'm estimating this data is going to be stronger, we do have a lot of room for upside on GJ to revisit previous highs. But we're going to talk about that when we do our GJ analysis. And I'm going to do the GJ analysis first before gold, just because we do have that data at 2 a.m. Eastern. At 4:30 a.m. Eastern, we also have another piece of UK data, which is the manufacturing production. At 5 a.m. Eastern, the Germany Zoo economic sentiment report, which can be impacting euro pairs, of course. And then during New York session at 8:30 a.m. Eastern, the US core CPI figures. So just those economic events, make sure to note that down. Obviously, in the next 15 minutes, we have that UK GDP. We'll be watching the live release of that data, potentially using that information to our advantage to execute on some trades, as I'll break down GJ in a second. Some of the key fundamental points we have to focus on is Brexit talks are back on the table, but so far they have been more to the optimistic side. Overall, investors and market sentiment is still very optimistic on the distribution and application of vaccines. The Q2 pullbacks we've seen to better demanded prices seem to be completing, especially when we look at GJ. We only have short-term tensions arising regarding Iran, but nothing that's really going to bring down the markets or stop market optimism. When we're looking at our charts right off the bat, when you look at the global stock markets in every region, you can see just from a technical perspective, stock markets are still continuously having buyers print highs with that financial support of the central banks continuing to flood their respective economies and markets. And we're only having these consolidation phases and breakout to new highs, or pullback phases and breakout to new highs, right? So when we're seeing stock markets are extremely bullish, when we're seeing the US dollar is still relatively flat on the higher time frames, the Japanese yen is bearish, and the volatility index is bearish, we're seeing that our safe haven currencies and safe havens are starting to lose strength as there's a fundamental lower demand, and the volatility index as well, and the global stock markets are bullish. This is showing us that markets are very optimistic. Now let's start looking at GJ and start dissecting some analysis. What have I been telling you guys about GJ for the last 8 months, every stream, every Zoom session? We understand that since March, GJ on the higher time frames has been extremely bullish for those fundamental concepts of a weaker Japanese yen as a safe haven currency and stronger risk currencies with how bullish the stock markets have been. We've only had GJ do two things: either push to new highs, have a pullback and continuation to new highs, or push to new highs, consolidate, and then break out into new highs. All right? You can see that every time a new significant high is printed, we enter this pullback and corrective phase, which behind the scenes, what is printing this technical structure and causing this sell-off from these highs is profit taking by buyers. All right, what you want to understand is as this profit taking happens by buyers and they exit out of the market so they can reap the rewards of the trades they just executed on, sellers jump in hand to relieve their order flow out of the market. The sellers, as they're taking advantage of that pullback play, push price down to a more favorable demand area for buyers to jump right back in the market and continue back up to new highs, or at least to the previous highs. Right? So fundamentally, GJ is very bullish with the vaccine optimism, with the optimistic Brexit talks as well. You can also see here in recent headlines, first Moderna vaccines will be delivered to England on Tuesday and will be used in more than 20 sites. So continued optimism regarding vaccine distribution from a macro perspective, regarding Brexit optimism as well. You can see this aggressive pullback that we had on GJ. The first question you want to ask yourself is, where did it come from? So you have to understand, where is that pullback coming from? So the pullback is coming from a new high being printed by buyers. So the first cue there is that it's coming from a new high. It's showing you that a new high was printed technically. At this new high, there's a higher probability of buyers profit taking. The same time, when you're looking at the market timing, this was the start of a new quarter. For those of you who don't know, April is the start of Q2, end of Q1, and the start of Q2. So we had brand new 3-month and 1-month candles open up as we've had that aggressive pullback, but that pullback did not break these previous lows or higher time frame bullish market structure. When you're zooming in here, and I'm coming to the hourly time frame, look at this. Similar to here, when you had buyers come and print new highs, you could see that you have this pullback phase that you can identify with a bearish trend line. Once you start to identify sellers' exhaustion and you break out of that bearish corrective structure and buyers jump right back in from that better demanded price after having this profit taking from the highs, you can see you run right back up to the previous highs and potentially new highs if there's enough order flow and the continued market optimism. Do you understand what I'm saying? So when we come into recent price action now, we can see something similar. This was a new high being printed by buyers. This was the previous high. This is previous lows. You would have to break below here to show a shift in market structure, breaking below the previous low. You can see from this high, you had profit taking by buyers exiting positions, and sellers jumping in hand to relieve them out of the market, creating this pullback phase at the start of April and the start of Q2. You have this bearish market structure respected for an extended period of time, almost like all of last week, as we come down to a more favorable demand area, start to get signs of exhaustion, and now potentially breaking out of bearish market structure. You can see here around 151, you have this price sensitivity area, an order block, and last rejection point. If we have strong UK economic data tonight, if the Japanese yen is still weak, if we technically break above 150.8 and 151, there is a lot of room for upside to start scaling in buys to revisit these previous highs. Right? If that UK GDP and manufacturing data is good, if the Japanese yen is weak, if we also have the global stock markets bullish, showing us investors are still optimistic, we know that the higher time frame structure on GJ is still very valid. We know that this was just a pullback phase. We know that previous lows have not been broken and bullish market structure is still intact. We can start to identify the exhaustion by sellers at this better demand area at 150. And when you start to zoom in, this is the last area that we really have to break above this price sensitivity area where we had this rejection, and 151 flat where we can validate all this as buyer side liquidity to start taking those buys right back to previous highs and creating more refined bullish market structure. Does that make sense for everybody? Okay, so we have this hourly candle closing in 7 minutes and the UK data. We're going to first watch that data alongside everything else. And you can also see we're above a higher time frame key level. You can see we had this bearish market structure being respected with sellers continuously printing lows until we came down to 150 flat. Then we started to notice buyers' exhaustion. And even when we had this aggressive pullback, we failed to break 151. Sellers jumped back in, but we had this technical double bottom failing to break that previous low, with buyers starting to jump back in the market right now. We're also creating some lower time frame bullish market structure we're going to line up here. And I'm going to show you guys on the 1 minute time frame. Okay? So when I'm looking at GJ, and I'm coming down to the lower time frames now, if at London Open we get a pullback to 150.5 and we don't break, high risk, high reward buys. If we break and retest above 150.8, buys. If we break above 151, buys. But this is going to be dependent if that UK economic data is good. Let me clean this up out of the way for now too and keep it simple, right? We can see this lower time frame bullish market structure that's starting to develop here. We really just need to clear above this previous price sensitivity area to the left. But I'm looking for buys if we have a pullback at 150.5 and a lower time frame support formed. I'm looking for buys if we break out above 150.8 or break and retest above 150.8. And the safest buys is if we break above 151. So either this, or this. I'd only be looking for GJ sells if that UK GDP data is poor across the board and we break and retest below 150.5. So 150.5 is a key make or break decision point for me. So as we're watching this hourly candle close up and the UK economic data come out, does everybody understand my GJ bias? My main GJ bias is looking for potential scalp and intraday trade buys as long as we get the market structure continuously respected, as long as we get the price action confirms at the PPLs, and as long as that UK economic data is also solid. And for what I'm telling you guys about how GJ has been trending, the pullback phases versus the moves with the trend, buyers just exiting positions from previous highs. All right? Okay. I just want to make sure before I move ahead, because GBP USD is going to be fairly similar. It's just GU is not at the same price point. But we have 4 more minutes until that economic data. So I'm going to quickly discuss GU here. All right? Now GU, same type of idea, right? GU on the higher time frames is extremely bullish. Same type of concept where you've only had buyers print highs. Sorry, wrong tool. You've only had buyers print highs. And from these highs, you either get pullback phases or consolidation phases that don't break the higher time frame bullish market structure, as markets have been overall optimistic. As markets have been optimistic, this means weaker Japanese yen, weaker US dollar, weaker Swiss franc. This means stronger risk currencies like GBP, Euro, AUD, NZD, CAD. Okay? So even though GU is creating this more refined corrective pullback structure, this pullback didn't break previous lows. We're also starting to create a technical double bottom at these previous lows, and we still have markets fairly optimistic. We do have potential for very high risk, high reward buys from the current price point we're sitting at. All right? GU did not break higher time frame bullish structure. It's just like when you had an aggressive pullback from here or here. You can see as you have that pullback phase, you can map out some bearish structure that gets respected on the intraday time frames. But as you break above that bearish structure and that demand area gets bought up by the buyers and you don't break that overall structure, you have buyers enter the market and revisit those previous highs. That's what we're starting to look to want to execute on GU. Okay? So when I'm looking at GU, you can see that even though we've had this pullback corrective structure, we've had sellers continuously print new lows until here. Now we're getting this double bottom showing us more sellers exhaustion, sellers starting to exit positions as we fail to break higher time frame bullish market structure. And we also fail to break this demand area. So if this GBP data is good when we come on the lower time frames and we fail to break these lows, there's a lot of potential for upside on GU to start revisiting these highs. But let's go look at that data that's going to be coming out in a second. And then I'll map out some better trade ideas for you guys on GU of exactly what I'm looking for. For GU, I'm pretty much looking for a retest of 372 or a breakout above 378. But we have that economic data in 20 seconds. The data might not be like have the instant impact because it's the same time London markets are open. German markets are opening up. And this is just a guesstimated release. It's supposed to be at 2 a.m. Eastern. So it's still going to be German market open, which means we could get our pullback first, liquidity grab pre-London hours, then continuation up. I didn't see it released yet. I didn't see the data released yet, so I'm just waiting for that. But it's still just pre-London hours right now, so no rush. It's just German market open pre-London hours. I'm waiting for this GDP figure. It's supposed to come out at 2 a.m. Eastern. But my screen froze. All right, first one came out. It's not good. This one, the first one, the monthly GDP, it's not better than what was expected, but it is better than the previous. It's not terrible. It's not terrible. I'm still waiting for these yearly and the 3-month figures here. Okay, the industrial output is good. The UK February industrial output is good. You guys can also see these headlines to the left, this data right here. You can see the headlines to the left. We're getting some of that German wholesale pricing data. It's mixed right now. It's like a neutral to mixed. It's not the best data. This GDP estimate is worse than what was expected. This is better. The yearly GDP is improved by 0.5%. But this is still good. Even if it's just is gonna give us our pullback and we still get the price action confirms. Also, by the way, once I give you guys the analysis and I confirm with the chats that you guys understand the analysis, you understand my bias, and you understand the price points I'm looking at, I'm not gonna just be looking at the 1 minute chart like a retard. I'm only going to start calling out the entries or price action or candles as we come to those price points of interest. All right? But yeah, so far the data's fairly mixed. Oh, actually 2 good reports, one bad report. So GDP is improving. It is better than they thought. We're going to call it neutral data. So UK economic data, fairly neutral. Fairly neutral. Same trade ideas still stand. If we'll start watching if we get the pullback to 150.5 or above 150.8. And when I say the UK GDP data is good, I don't mean good as in like, oh, UK's economy is booming. I just mean it's better than what they forecasted, because they had a worse forecast. All right. So I still don't want to touch GJ at the current price point. I still rather would want to wait for that pullback. GU, same idea. I'm waiting for either a pullback to 372, high risk, high reward buys, or buys above 37800. I'd only be looking for sells below here on GBP USD. Does that make sense to everybody? So does the GJ and GU analysis make sense for everybody? I'm going to go check out gold now. And we'll do some gold analysis. Cool, cool. Yeah, the UK data was fairly neutral. All right, let's go to gold now. So this is gold on the 4-hour chart. You can see, same idea. With the initial market fear that ensued March 2020, and we had first those global lockdowns and pandemic, you can see we had this impulsive play all the way to 2075 to peak new all-time highs. As that initial fear, uncertainty, and doubt got priced in, and then we had a flood of vaccine headlines and more market optimism with the support of central banks, the demand for gold started to decrease, the supply got regulated again, and we saw gold enter this bearish corrective structure, right? You can see this was the last previous impulsive low that gold created around this 1770s area. So now, as markets are still very optimistic, we got this double bottom at this potential higher time frame bullish market structure retest point and this liquidity zone to the left, but we have failed to break above this previous low, and we're still respecting this higher time frame corrective bearish market structure as we have markets more optimistic. When markets are fundamentally more optimistic, this means in the short term that investors are going to have less of a demand to put their liquidity or put their investment and money into gold. They'd rather take liquidity out of gold and put it into the stock markets, into the equity markets around the world, right? So that's just on the higher time frames. And you can also see that when we zoom in here, this was the last previous low, where we are exactly failing to break above that area. So yes, we had this very aggressive bounce from our 1780 higher time frame key level, but as we're digging back into this liquidity zone and higher time frame order block, and markets are still optimistic, plus we might have potential short-term US dollar strength, If we stay below 1726, 1727 and come back below this order block, there's a lot of room for us to just go back to revisit these lows and dig even deeper on gold. Right? We're at a pretty significant higher time frame key level that we're starting to approach around 1721 in a medium term zone around this, like in this liquidity zone that we're starting to enter. But you can also see that we're still respecting that higher time frame corrective structure. We're still having gold sellers continuously print lows for us to potentially revisit. We haven't broken above these previous lows, and we haven't had any macro higher time frame fear, uncertainty, or doubt. Even this aggressive cap bounce we had from the 1680 previous lows, where we created this technical double bottom, it still didn't break above that previous low, and we didn't have any of those fear, uncertainty, or doubt headlines like hold any long-term strength as well, right? So when I'm looking at gold now, you can see that we had this bullish market structure that was being respected for about the last 8 or 9 days until we peaked around that previous low price and higher time frame key level at 1760s. Now we've been creating this more intraday bearish market structure where sellers are printing lows, we're having pullback phases and continuous lows printed. If we get a pullback to around 1732, if we get a pullback overnight to around 1732 to retest this lower time frame bearish market structure and we don't break, I'd be looking for continued corrective sells on gold. Or if we break below 1721, I'd be looking for sells on gold. We're starting to get more signs of buyers exhaustion. We're starting to break below these previous low prices here. We're breaking that bullish market structure we've been looking at. We do have macro optimism still holding stronger, like I was showing you guys just in those key fundamental points we're talking about. Right? It's the same reason, like, even though GJ had that very aggressive pullback and everyone thought, oh, GJ is going to be a full reversal. GJ is going to be a full reversal. It still didn't break those previous lows, and it's still respecting higher time frame bullish market structure. So even though gold had a great bounce off 1680, it's still not breaking that seller's corrective macro optimism structure that's been respected, and especially when we're looking at the intraday structure here as well. So I'm just looking to extend this out, and when we're coming to the 1 minute time frame, if we get a pullback to retest this structure and the price action confirms, I'd be looking for the sells at 1735, 1731, and below 1721. I'd only be looking for gold buys at this point if we could validate breaking out of this bearish lower time frame structure that's been respected up until this point. Right? We would have to break above 1739 to validate sellers' exhaustion and buyers' momentum and have a continuation to the upside. Otherwise, if we get a pullback to these price sensitivity areas around 35 and 32 or break below 1721, we're going to start watching the 1 minute lower time frame price action for any candle confirmed signals to start executing sells, to start revisiting these lows and potentially creating new lows. Does that make sense for our gold analysis? We're also going to be keeping an eye on the US dollar overnight, and we're going to be patiently waiting for these execution points. Dollar's just been a bit messy. It's just been in an intraday range. For that reason, that's why we're not going to be trading USD CAD or looking at USD CAD tonight. Because when you look at USD CAD, with that tug of war between that short-term strength on the dollar, the optimism still supporting CAD, and crude oil, you can see we've been in a very messy consolidation. So it's best that we just don't touch US dollar against the Canadian dollar. The safest trades on UCAD would be if we have continued market optimism, which would mean bullish Canadian dollar from a bullish crude oil, a weaker dollar index and US dollar overall, and if we got a break below 1.252 area, that's easy sells to revisit these lows. And same with the inverse above 264 with market fear. It's best not to stress and exert your mental energy and waste your time trying to play these intraday ranges when we could possibly take advantage of something more favorable that looks a lot cleaner as per the probability. So we're not going to be looking at USD CAD as it's just primarily been ranging, even though it's still respecting that higher time frame bearish market structure. GJ, we're going to be taking scalp buys if it comes to 0.500 or above 0.800. We're only 10 pips from 0.800. It looks like we might get that. Yeah, make sure if you guys want to see the analysis that was given so far on GBPUSD or gold, just rewind this stream so I don't have to repeat myself. But as we approach 150.8, I'm going to start looking for breakout candles, then potential retest entries, or breakouts and potential order block entries. Or even the breakout entry if you want to be more impulsive. Looking for bullish candle closures above 150.8. That UK economic data was still fairly solid to the neutral side, and we're still respecting that structure and that bias like I was telling you guys. Gold, we're only going to start watching the price action if we get that pullback to 32 or 35, or if we break below 1721. We can also watch it if we start to break below this low created at 1725, because even that's a pretty favorable 40 pip range down. Just GBP, we also have to be cautious at 4:30 a.m. Eastern for the UK manufacturing production data. Gold, buy or sell fast. Gold is very low. I'm buying. God damn. That's some. Good luck. Good luck with that. I'm gonna save all roasting and banter till later on. Fucking retards. Thoughts on USD CHF? I don't trade safe haven pairs against safe haven pairs. All right, let's start looking at GJ. We might get our play shortly. We can see this hourly candle already created a very nice significant lower wick. Once we start clearing above these candle bodies and getting bullish candle closures above here, just like I was telling you guys with that analysis at the start of the stream, there's a lot of room for upside from this favorable low demand area and all this liquidity that was generated to start taking us right back up. Okay, so I'll start looking at that as soon as we break above 150.800. Yeah, right. You didn't want to see a reaction. That's how you trade, bro. You can't backtrack now, all right? Make sure you guys check out all these other capital hungry videos. It'll teach you a lot of information. Everybody talking about, Jeev, what do I do in the 1 minute? Jeev, what do I do with the analysis? Jeev, how do I do this? How do I do that? Like, fuck, man. I feel like I'm all your guys' daddy. You guys are sitting in a little baby chair with a bib on, no shirt on, Fruit of Loom diapers, and I'm feeding you some dirty ass baby food with your disgusting ass face, slobbering all over everywhere, making a mess. Like, I'm disgusted by it. That's how I feel. You guys have to understand my perspective. You guys understand your perspective as the baby asking daddy, 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 daddy. But understand the father's perspective. Give dad a break. And help yourself a little bit. I already taught you how to read, son. I already taught you how to read. I taught you how to write. I taught you how to wipe your ass, how to tie your shoes. Now here's daddy's secrets, all right? All of daddy's secrets right here. You got higher time frame analysis, scalping webinar. You got a scalping 4-part series. Psychology webinars, fundamental webinars, higher time frame webinars, lower time frame webinars. You even got me ranting nowadays. You can even see me here. You can see my face. You know what I mean? I'm doing my best. I'm here motivating you guys, showing you guys how strong I am when I'm flexing. I'm even here showing you guys how to cook. I'm even here showing you guys how to cook. I'm showing you guys how to clean. I'm showing you guys how to get physically stronger, mentally stronger, financially stronger. You know? I'm giving you guys news headlines, analysis information. Help yourself a little bit. Help yourself a little bit. These ones, though, these ones will change your life. All right? Please, please, everybody. Before I lose my patience, before you guys drive me to the edge. Yeah, man. I cook, I clean. I'm like a I don't know what to call it. I don't want to say single mother because some single mothers be trash. Holy, and then this guy made it fashion, and then he still says that. Bro, get out of here, bro. Get out of here. Put this user in timeout. Put this user in timeout. I can't keep feeding you guys. Eventually, somebody got to feed me. All right. So, gold analysis is shared and set. We're going to be watching either 1725. And then I'll start watching price action if we get some nice impulsive breaks to keep selling down to 1721. We're going to be looking at 1732, 1735. GJ, we're looking at 150.5. Breakout above 150.8, 151 execution points. GU, 37.2, 37.8. Euro USD analysis. Let's get it here. All right. Now, EU, same idea. You sold your motorcycle today so you can replace that payment to join my private chat. You don't have to do that, man. You guys do not have to. It's $100 in the month, man. It's $3 a day. The private chat's not $1,000. You know what I mean? If you guys can't afford the capital hungry private services, you don't have to go out of your way to join it. It's okay. It costs $100 for a reason, because of everything that's offered in there, the services, the quality, the content, the tools, and to prevent too many fucking retards from joining. Right? To keep exactly what Neil said. If you can't afford the $100 a month, then you honestly can't afford to trade. And that's not telling you to go join me. If you don't want to join me, then just go join something else. But we've only had Euro USD have these consolidation phases from highs, and the same type of idea as we've been fundamentally still very optimistic and bullish. You know what I mean? So when I'm looking at Euro USD here, even though we got some economic data, we do have a lot of potential for upside to like 1.2, you know? But everyone started somewhere. I know, but there's too many people who come into trading with false expectations and think that as soon as they learn about Forex, that they can take a $100 account to retirement money and they can quit their 9 to 5. When you start to learn about Forex, you should actually go get another job. You know what I mean? You should find a way to now start to create some disposable income that you can actually use in your trading accounts, that's not going to impact your day-to-day life and day-to-day finances. Because if you do not make enough money at your 9 to 5, and then you're taking money out of what you're going to use to pay your bills to fund your trading account, all you're doing is putting unneeded pressure on yourself on top of already having terrible expectations and false expectations. Do you understand what I'm saying? Even though I had a business outside of Capital Hungry, a furniture business with my cousins, even though I started Capital Hungry, which started making thousands of dollars a month to tens of thousands of dollars a month, even though I started making thousands of dollars trading and tens of thousands of dollars trading, I still stayed at my full-time career job all the way up until April last year. I still was trying to save as much of people. I still was trying to save as much disposable income as possible, trying to have as much of a nest egg as possible, to make my trading as stress-free as possible, to ensure that my bills are paid, that I'm not in any type of debt, and that I also have the disposable income to properly put the time and effort into trading effectively. Do you understand what I'm saying? I was running Capital Hungry all hours of the night, and the free chat, which is still like, I was doing all the free stuff. I was doing the Capital Hungry private chat. I was moving furniture on the weekends. I was working full time in the financial district in Toronto. I was going to the gym, had my girlfriend, still have the same fucking, whatever. Still got my girlfriend. Anyways. But you get what I'm saying. Alright? You understand what I'm trying to say. It's possible. I was using every single hour in the day I could. Was I feeling exhausted? Tired as fuck? Depressed? Yeah. Was I feeling anxious and on edge all the time? 100%. Was I feeling like all this was for no reason? 100%. But guess what? Feelings and emotions don't matter. They don't matter in life. They don't matter in the market. They don't matter. These feelings don't matter. No, I'm just playing around. I love my girlfriend. She knows that. She knows she got an alpha. She just has to start playing her role. But you get my point. And people think, well, I was dealing with all that just because I had a smile on my face, that I wasn't having any doubts. Oh, just because Jeeves doing all this shit, just because he's smiling, oh, he must not have any insecurities. He must not have any doubts. He must not have any fears. No. I'm still the same as any of you. I don't have any photographic memory. I don't have any special God-gifted intelligence. I'm just as big of a retard as you retards. Right? I just actively started to make that choice, and this was like 3-4 years ago, that instead of wasting my time, I'm going to actively start using my time. If I have that hour to go to the gym or do something physical, I'm going to go do that. If I have that hour to develop better relationships with my family or friends or business-wise, I'm going to do that. If I can use that time to start putting more effort into a skill set development, I'm going to do that. All right? All the information you guys see me share, all the trades you guys see me take. Like somebody said, hey, Jeev, how come you're not going to trade for the next 2 weeks? Because I went from, with putting the time and effort in and developing this skill set, I went from sharing information for free and doing the same shit I'm telling you guys and making $1,000 in a week in 2019 to taking those same trades to this day And over the last week and a half, did I share it here? Where am I? Am I at the start or the end? Honestly, I put so much information in here. Holy fuck. Well, where's my last week shit I shared here? Yo, make sure you guys watch these webinars. Also, you guys see these facts too? Make sure you guys check these facts about why I talk about that stuff. To making 25K. Right? Feel me? Look at all this information, man. No clickbait shit. No marketing shit. Even show the process. Show the full slip. Hey guys, this is when I was up 18K. These are the few losses I took. So much information here. So many webinars. So you can see the full process of like last week when I was actively trading. Hey guys, this is the previous day. I was up 12K. Hey guys, these are the full trades. There's the live tag. Hey guys, here's the progress so far, or the update. Now I'm up 18K because I took the same trades I showed you guys on the stream. Here's the full slip. Right? So now, if I don't want to trade for a week or two, I don't have to. You know how long it takes the 99% of people in the world, perspective-wise? You guys gotta have perspective, and I always have perspective. All right? It used to take me, and you guys have to understand. I worked at the full-time salary that I was working and the full-time career where I was working. Everybody would think it's a great job. I was working at the Royal Bank of Canada in the Global Operations Command Center, right? Dealing with international operations regarding money transfers, the markets, insurance, and everything in between. All right? This was a full-time salary job where I have to wear a suit and tie, working in the financial district in a big corporate building where I gotta have a name, where I gotta have a security tag just to get in the office that I work in, just to get on the floor that I work in, just to get in the room that I work in. This is the type of job where in the media, everyone's like, wow, that guy's valuable. Where my family was like, wow, you're making a shit ton. You're valuable. Where my friends were like, wow, you work in the bank. I used to work 60-hour weeks to make $4,000 a month. Not even $4,000. $1,400 bi-weekly. Not even $3,000. $1,400 bi-weekly. Think about how society is hypnotized. Now, am I saying that trading is for everyone and you can replace your income with trading? No. You guys can clearly see that I put a ridiculous amount of time and effort through the trial and error, through developing my accounts and capital, through learning, through back testing, right? No, RBC on Wellington in Toronto, on 155 Wellington, that building, 155 Wellington. I still drive by there now, sometimes, like, just when I'm bored, just to be like, damn, you know what I mean? Sometimes I miss it. It was so easy. It was so stress-free. I just do my zombie-ass work and get paid. But it just wasn't worth the value. But anyways, you know what I mean? So anyways, I used to work 60 hours a week to make $1,400 bi-weekly. And what I'm trying to tell you guys is, in the mainstream media, to the 99%, that was a great job, quote unquote great job. If you went to anyone and said, yeah, I work for Royal Bank and global operations in the financial district, They would say, "Wow, you guys get what I'm saying from a psychological perspective?" But think about it. But now, I could take a 5 lot trade and get 100 pips on a 5 lot and make $5,000 right there. And in that one trade, in one position, and maybe one day or week, that's more than I was making in that entire month of work, working 60-hour weeks. In the market, you do not get paid for your time. You do not get paid for the amount of trades you take, the amount of hours you spend exiting and entering trades. You get paid for your skill set. You get paid for your knowledge. You get paid for your experience, your risk, your patience, your decision making. Do you understand what I'm saying? In trading, less is more. Only with 9 to 5s do you get paid more with the more time you put into it, because you're getting paid for the hours you work. But in trading, less is actually more. Because you have to understand, the market is very, very seductive, just like a casino from a psychological perspective. The more time you spend in the casino actively gambling, the higher probability you have of losing trades or losing money in the casino due to natural human inefficiencies and weaknesses. Remember, you are not a robot. Even though you may think you're still feeling energetic, even though you may think you are still focused, even though you may think you're still 100%, you're not. All of us have natural human inefficiencies and weaknesses that we will succumb to and fall victim to, like getting tired, different emotions, different chemical imbalances that can take place in your brain, having factors that are impacting your emotions outside your trading, right? So just like in a casino, I don't know if you guys, I'll give you guys an example. But if you guys have ever sat at a blackjack table or a poker table at the casino and you're playing with you're playing high roller tables, or you're making thousands of dollars per hand, right? As soon as you get above a certain amount of profit that you're up, remember, you don't get to cash out or actually take your winnings out of the casino until you take those chips and you go to the front desk and you cash them out for money and you walk the fuck out the doors. Until then, even when you're still holding your chips in the casino, you still have the risk of losing it. So there's a tactic that casinos have that as soon as a person is up big, the casino will start offering that person food, dinner, drinks, a hotel room. Do you know why? Because the casino is playing a game of math and probabilities while you're playing a game of emotions. The casino doesn't mind spending a few extra dollars on a dinner or giving you a hotel room, knowing that if you accept that dinner or hotel room, there's a higher probability you're going to spend more time in the casino, which increases your probability exponentially of giving all your winnings right back and losing money on top of that. It's simple. The casino runs on math and probabilities. Otherwise, the business wouldn't exist. The markets run on math and probabilities. Just like in the casino, just like if you were trying to be some type of 1% athlete, or you're trying to go to the NBA or NFL, out of the 1,000 people that try to go pro in any sport, only a few make it. Out of the 1,000 customers that go into the casino, only a few profit. Out of the 1,000 retail traders that enter the market, only a few will become consistently profitable. And it has nothing to do with brokers. It has nothing to do with someone hunting your stop loss. It has everything to do with probability and the psychology of humans. Amen. The market and casino are exactly the same. If you think otherwise, you're just very uneducated. Just because you might be Muslim and you're not supposed to be gambling, it is not a way to justify trading. Trading is no different. If you're trying to justify going against your religion because you want to trade so bad. That's just that you got your own demons to fight there, buddy. But hopefully that makes sense to you. In the markets, less is more. You have to spend more time studying. You have to spend more time understanding the markets. And you have to spend less time actively entering trades and exiting trades. Right? Exactly. Yes, exactly. Everybody in, especially retail traders, they're just hyenas and vultures who are constantly trying to flip their account or get any little bit of profit, but they'll never stay in the markets long term. You guys have seen me starting from penny lots to now making 25K in a week and a half since 2017 now. Right? I've been practicing what I'm preaching right in front of you guys, showing you guys the improvements. While everybody else you guys follow comes and goes. All these marketers come and go. These signal chats come and go. Account management, proprietary trading, signal chats, cookie cutter courses, they all come and go like the wind, like the weather. You know? Gold did not break these lows yet. I'm going to tell you guys when we got better price action confirms for sells. GJ, no safe buys yet. GBPUSD, no safe buys yet. Euro USD, we're going to talk about in a second. But Euro USD, I'm only looking for buys if we have continued market optimism and a break above our higher time frame key level and consolidation zone. Yeah, the market, whether you want it, even though there's analysis behind what you do, even though you could follow risk management principles, you're still taking a bet on an idea you have of the potential direction a trading instrument can go. There's a winner and there's a loser. That's what risk is. That's the risk involved. It's just it's just common fucking sense. You know what I mean? But common sense nowadays ain't so fucking common. But I'm only looking for buys on Euro USD above 192 on a 1 minute break and retest above that area, above 1.192. Gold, we're gonna be gold. Let's look at gold. What time is it right now? So we've already had the previous 30-minute candle. Let's see how the 30 is looking. This 30 is looking nice and bearish still, but we haven't had any clean 1 minute candle breaks below this previous low yet. We need a bearish impulsive candle to close below for a breakout entry, then weaker bullish candle retest and continuation down. We haven't had any bearish candle closures below the previous low yet. All right. The only people who are going to be mad at the objective advice I'm giving you guys from a psychological perspective are the people who are trying to flip accounts, who are selling signals or following signals, who are trying to get their account managed, or who are over trading and who are over leveraging. Those are the only people who are going to be angry about the advice I'm giving. Why else would you be angry about the objective advice that I'm giving? You know what I mean? You're acting like I'm giving some bad advice because I'm telling you the reality of the markets. Remember, I don't care if it's FTMO. I don't care. I don't care if it's IML. I don't care if it's IML trying to sell fake high frequency trading. I don't care if it's your mentor like Sean. Have you guys seen Sean Lee and Daniel Savage's interview where Sean Lee tried to talk about institutional trading and he said institutions use lots? He talked about using 5,000 lot. All bullshit. I've worked in the biggest Canadian bank in the back end. I have access to a $30,000 data terminal. Banks do not trade in lots. Banks trade in contracts. First of all, you can't trade from your own bank account. As soon as you want to start trading institutionally and having contracts with some of the big name banks like JP Morgan, Morgan Stanley, you have to first open up a separate trust account, deposit money into that trust account, bring your hedge fund investment plans and hedge fund trades to that broker and bank, have them stress test your hedge fund, and then validate all the finances and be able to audit all the finances through that trust account that both of you guys would have access to. How the fuck would you trade out of your own bank? How would that be audited? How would the fuck... It doesn't make any sense. Do you guys see this? Do you guys see the individual currencies to the left? Do you guys see the bid and ask price being changed every single minute by these massive global banks? Do you guys see that these global banks, they're not staying in one spot either? Every single major bank around the world, around every single major region, are constantly exchanging and trading every single currency back and forth every single millisecond. That's what high frequency trading is. Astro Forex, Q Banks, Daniel Savage, GoldFX, IML. Nobody on Instagram is accessing this type of trading or high frequency trading or institutional trading. Look at the amount of major banks here. Look at the locations: Toronto, Shanghai, Zurich, New York. Look at the languages changing. Look at the source, the price points changing every single second. The way they described how you connect as an institutional trader is wrong. The way you trade as an institutional trader, they said, is wrong. Nobody in the retail trading market knows how banks trade. Banks spend billions and millions of dollars to hire the best trained developers, the best trained data scientists, the best trained mathematicians and programmers to hide their trails from other banks, to constantly be adapting and tweaking their trading algorithms, to pay for the best technology, fastest computers, fastest data centers, fastest connections to these trading exchanges. No retail trader has the information, resources, capital, or technology to trade like an institution. And this is only Asian spot prices. Every single currency, constant fluctuation, and this is only as fast as the screen can update it. It's actually milliseconds, fractions of a millisecond, and getting faster and faster as technology improves. Everything Sean Lee and Daniel Savage said regarding their algorithms, regarding institutional trading, was absolutely false. People just use the word bank, the word institution, and try to say they're institution traders to make themselves feel more professional and to sell and market based on that tactic. Because as soon as you throw in the word bank and institution regarding making money, now you have shit tons of retards trying to buy into your marketing tactic. Do you understand? I don't care who it is. Nobody on Instagram, nobody on social media, including me, including the guy who you guys know has worked at the biggest Canadian bank. I worked at the biggest Canadian bank in back-end financial tech for 4 years. I studied the markets fundamentally and technically on my own time for 4 years. I have access to these data terminals. I don't know how banks trade. I'm not trying to trade like banks, and I'm never going to claim that. And nobody else on the retail trading space does either. Okay? Look at this. Santander, Barclays, HSBC, JP Morgan. Look at the locations changing every second across the world. Prices of these currencies changing. And you have to understand, banks don't trade currency pairs. Banks trade the individual currencies themselves. Banks are looking at the individual currency value against the US dollar. That's why the US dollar is the world's reserve currency and the world business currency. I'm not wrong. It's right here in front of you. This is the Reuters data terminal. You think I made this? You think I made this application up right now? You think I created this random application with all these random banks constantly updating the prices? It sucks to hear that the marketer you've been following and the mentor you trusted is an absolute fucking liar. It sucks to hear that. It sucks to hear that you got scammed. It sucks to hear that you got told false expectations, false dreams. It sucks to hear that. But this is the reality. You can't trade like banks. You don't know how banks trade. It sucks to hear that. You know what I mean? As a retail trader, I pay good money for these data terminals. You know what I mean? Mary Wan. This is why you should listen first and talk after later. I already said banks do multiple types of trading. Banks do not trade in lots. Banks trade in longer term contracts between other banks and also in higher frequency trading. Yeah, banks have contracts with other banks. That money being moved around in a big circle from central banks to governments to corporations, it's making the banks constant money. You think the market makers are retail traders? Are you guys stupid? Holy. No wonder guys like Q Banks, no wonder guys like Daniel Savage and Sean Lee get believed so easily. It's because you have so many uneducated, ignorant retards. For those of you guys who don't know, all of the retail traders as a collective, every single retail trader put together through history is not even probably 5% of the liquidity in the entire market. In the entire currency market. You know what I mean? But it's all good. I'm just trying to give you guys the reality, and I'm trying to give you guys information directly to the point. All right, gold is potentially setting up the sells, but we have London Open in the next 10 minutes. So it'd be ideal to wait for the London Open candle, but it looks like we are going to start to get a bit of an impulsive break where we can start to get that retest and continuation down. Yeah, people really have a false understanding of the market. But that comes from getting exposed to the market from these fake guys like Sean Lee, Daniel Savage, Raul FX, or Lambo Raul, Q Banks, and all these people who claim to have revolutionary algorithms or claim to have banks do no longer have manual traders. This guy's living in the fucking 60s. You have to understand. You know how all these algorithms are coming out now? Big banks started creating trading algorithms, like some of the big names like Jim Simmons or your boy Ray. These guys started creating trading algorithms in the 1980s. Can you guys take that in, please? Okay, guys, let's watch GJ as well too, getting the potential breakout. Yeah, you guys know guys like Jim Simmons, guys like Ray Dalio. If you ever actually study any of these actual people of influence, these guys started developing their trading algorithms in the 1980s. Now it's 2020. We're in the digital age. Henry King is living like the King Henry the Eighth in the fucking. Henry King is a descendant of King Henry over here. Straight fucking historical, straight living in fucking medieval times. Starting to get this break. I just want to see how London. I just want to wait 7 minutes until actual London session open. You know. we got King Henry the Eighth over here telling us about how he used to trade cattle for gold coins. Let's wait till London open, guys. It's only, let's just be patient. It's only 7 more minutes. Let's do some Euro. Oh, I already said the Euro USD. We're just waiting for buys if we come above 192. USD CAD we're not going to touch. Let's take a look at US 30 as well. we got King Henry the Fifth here, trying to tell us about how he used to sell round table night futures. Listen, I don't know why you guys are angry when I'm giving you guys objective information. Yo, King Henry the Eighth. Who said central banks or these institutions don't trade? Who said that? Somebody say that? King Henry the Eighth sitting at his desk on his 1990 MacBook. First computer ever made, eating a big ass turkey leg. For US 30, I'm looking for a breakout above 33,800 and continued market optimism buys into new highs. US 30, I'm looking for buys if we can break and retest above these 1 minute rejection points, above 33,800, start looking for scalps. Gold, we're waiting for London Open. GJ, we're waiting for London Open as well. If GJ can give us a nice bullish candle close as is, above 0.800, and the next hourly candle just creates that quick lower wick, and then comes right back above, we can start taking some momentum buys. Okay, for example, everybody, my girlfriend is a developer, all right? She went to school for 4 years for computer science. She got hired by a bank to develop the code, maintain the code, and monitor the application regarding mortgages, all right? She works with a team of 10 to 15 people to constantly monitor this code and algorithm and application regarding mortgages, mortgage applications, and so forth for some of the largest Canadian banks. All right? Just like her, there's millions of others who went to computer science, who went to school to become developers. Banks hire these developers, pay them full-time salaries to monitor the bank's various applications and programs. A good majorities of these banks' applications and programs are their trading section. Whether it be stocks, bonds, currency, gold, crypto, whatever trading the bank does is primarily automated and being automated and observed and tweaked by these developers who are being paid full-time salaries. Their 9 to 5, their job is just that. When they got hired by the bank, JP Morgan said, hey, you're working with 15 others. Here's the data scientist, here's the mathematician, here's the developers, here's the programmers. We need an algorithm that's going to do X, Y, and Z. And then that's their job. Do you understand? People are working full-time salary jobs, 9 to 5s, developing these algorithms, maintaining these algorithms, tweaking these algorithms, and making sure these various applications for the bank always work. All the way from the bank's website to just simply deposit and withdrawing, from everything in between to its insurance, mortgages, retirement, all the way to the trading side. It all has a tech infrastructure supporting it. Understand? So when you have, and banks also have more resources and capital than any of us. So banks are paying top dollar to get the best developers, the best data scientists, the best mathematicians, the best physicists. They're also paying top dollar for the best supercomputers, the best and most efficient, fastest technology, the fastest connections. Right? So all I'm telling you guys is, when you see a marketer and you see an IG marketer saying, oh, I trade like an institution, I'm taking 5,000 lots like an institution, oh, I have a hedge fund, oh, I high frequency trade like a bank. Just use logic with what I'm telling you right now and understand that's all a lie. It's just a marketing tactic to seem smart, to seem cool, and to sell an idea. All right? You know what high frequency trading looks like? It looks like a data center full of supercomputers, servers, and hardware, all wired up as refinedly and as efficiently as possible to make sure there's not even a drop of voltage or a loss in ping. Do you understand? All right, let's pay attention here. London Open hourly candle just pushed down and made a lower wick first, which is what we wanted to see. If we can get bullish confirms above 0.800, we're going to get a nice buys here coming up. Hourly candle on gold here is pushing up first with not much of a lower wick. So this is why I didn't want anybody to start jumping in sells. If gold makes that quick upper wick and fails to break this price sensitivity area, and then comes back below 1725, then we'll sell it. Otherwise, we're not selling it. And GJ, we're waiting for price action confirms above 0.800. Right? So what the information I'm telling you guys, does my information I'm telling you guys have any type of agenda or personal motive for me? Does me telling you guys of what I learned at my 4 years of working at a bank, or showing you guys that Reuters terminal, or telling you guys the reality of banks hiring full-time employees to monitor all these systems and applications. Is what's the benefit of what am I getting out of that to tell you guys that? Like, why are you guys angry that I'm saying this stuff? Just because I'm saying the mentor that you believed is wrong, why are you mad at me? Right? Also, gold here. If gold breaks these, if gold has a 1 minute candle close below these 1 minute lows, it's gonna melt. So that's what I'm looking for below this 1725, you know? Yeah. Think about the example I gave you guys with Sean Lee. Sean Lee is trying to make himself look like an institutional trader so he can improve his influence and sell more courses, sell more signals, sell more Astro Forex content. Daniel Savage is trying to support that or promote that he knows how brokers work or how institutions trade for the same idea, to improve their influence to sell more content. Same thing with any other marketer or IG person that's just trying to sell more content, right? I'm telling you guys, like, yes, I have a service where I sell information regarding the financial markets, but I'm telling you guys, trading's hard. I'm telling you guys, this shit is no joke. I'm telling you guys, this is not easy. We do not know how banks trade. All right? Now, when I'm looking at gold here, if we get bearish candle closures below these candle body lows and we start to break lower and get impulsive sells to target 1721, I want to make sure we don't break back above here. But I'm waiting for bearish engulfing candle closures below these 1 minute candle bodies. GJ, we're waiting for price above 0.800. And I also gotta take a piss, man. I've been talking so much. I talk so much, man. You guys gotta... I give so much information on banks, on psychology, on technicals. Like, at least send a like, at least subscribe, at least share it around. Alright? Don't forget these recent fundamental points that we're looking at that are still very much active, to keep an eye on the equity markets, to keep an eye on the US dollar and Japanese yen movement. Don't forget the economic data. We've already seen the UK GDP figures, which were neutral to solid. We still have UK manufacturing production at 430, the Germany economic sentiment at 5, and then the US CPI at 8:30 a.m. Eastern. Don't forget your mental reminders as well. Same trade ideas and analysis still stand. We don't have any too high impacting headlines to the left just yet. I just really have to go to the washroom here. All right. Sorry, I started to go to the washroom there. All right, let's look at gold here. So, gold, we're getting the bearish price action. We're getting the break below 1725, which is good. But we're not getting as strong of bearish price action as I'd like. We had this one bearish candle, then very weak bullish, then very weak bearish candles, and a stronger bullish candle. This is showing me that as long as we remain below 1725, we're good. Like when this is the main area of interest that I'm looking at, and as well as here now. But what I need is stronger impulsive bearish candles to start closing below these candle body lows with weaker bullish pullbacks. Okay, so it's still looking good to potentially start melting down to 1721, but I need this following candle to close below these candle bodies to show more sellers pressure. All right. And then I'm just gonna start watching it as we can potentially extend down to our 1721 targets. But you can see London Open was just here where it quickly did that pullback and made that hourly top wick. We had the stronger bearish candle, which was good. I need this bearish candle to close as is. I need it to close below these bodies. If it closes like this, that's pretty weak, and we can have buyers jump right back into 1725. I need continuous bearish candle closures, weaker, smaller bullish candles, and I need to close below these bodies. I don't want it to close at the exact same price. I want it to close bearish and below. All right? See how it closed right on the dot here? And a weaker bearish candle close. This is not the best bearish candle, but as long as this bullish candle still remains below 1725, we're still good. I would just be cautious because there's a higher probability we're gonna pull up to 1725 now. This is not the best price action. Do you see what I'm saying? So now if this candle breaks above 1725, sells are invalid. It would have showed us a lot more sellers momentum and seller order flow in the market if this candle closed bearish engulfing below these bodies. You can see instead we ended up closing at the exact same level and closing with a weak bearish body. Right now we're still respecting below 1725. I need this 1 minute candle to create a wick and close bearish and still continue down. If this closes above 1725, stay out of gold sells. Okay? If this next bullish candle engulfs and closes above 1725, just stay out of the sells for now. That it's not set up yet and the price action confirms are not cleanest. All right? GJ, we're not taking anything yet unless it's above 0.800 or we get a 0.500 retest. It's only about 12 minutes into London session. Does that make sense though when we're observing the price action? We were having some nice bearish price action. We're starting to get a bit of indecision here and a slowdown. And then this was a very weak bearish candle close back above these bodies. Now we're getting this bullish impulsive candle. And if this closes above 1725, we're not going to touch gold for now. All right. We're still respecting this as well, which is good. So we still didn't close above 1725, which is good. But we need to remain closing below here. And we need stronger bearish engulfing candles or a sequence of bearish candles. And then we need to break below here to extend the trade. So it's good that we're still closing below 1725. But we don't have any bearish candles now, and we don't have a break below this price sensitivity area. If this candle closes as is, then we're gonna stay out of gold. If this closes like this, stay out of gold for now. stay out of gold for now. I need to come back below 1725 with a bearish engulfing candle to start taking sells again. This sequence of events and price action, about those 3-4 candles, and then where this bearish candle closed, was not ideal. We're still respecting the bearish structure at least, but I need this candle to be a bearish engulfing and engulf this previous candle body. Otherwise, there's no sell confirms yet on gold. Stay out of that. Let's go look at GJ for a second. GJ obviously came up to 150.8, did not give any clean price action confirms of a break and retest above it. It just rejected that area. But we're not going to be touching GJ as it's just in between psychological price levels. We're either waiting for the deeper pullback to 150.5, or we're waiting for the break above 150.8. Once it comes to 0.800 or 0.500, I'll start observing price action for entry points if we have clean price action confirms to enter. See, this is better. If this candle closes bearish as is, it's looking still better now. But we need this candle to close bearish engulfing the following candle just to make a quick upper wick. Then we can start taking it back down, but we can't extend the sells unless we break below here. I like how we're still respecting that bearish structure. We're still below 1725 now. This is better price action with that bearish candle close here coming up. But we have to be very cautious of this, where we rejected and bounced before just 10 pips below. All right. GJ deeper pullback. GBP USD, nothing to execute on. Euro USD just went up and down quick, nothing to execute on just yet. Okay, so now this candle, what we want now as per the sequence of events is either continuous bearish candles or very weak bullish candle closures and then continuous bearish candles. If I can give you guys an example, we want a sequence of events similar to this or this. We do not want strong bullish engulfing bounces. We do not want the previous bearish candles getting corrected. We do not want large bullish candles or consecutive bullish candles. That's not what we want. All right? We want to start to see stronger bearish impulsive like this bullish candle closing like that is fine, but we need this bearish candle to close below these bodies and continue back down. We don't want bearish candles to be closing weaker than the bullish and then stronger bullish candles or engulfing the bullish candles. We want more consecutive bearish candles, weaker bullish candles, more larger engulfing bearish candles as well. All right? I don't want it closing like this. This is showing me another weak bull. This is showing me more weak seller's price action again. I want that sequence of events of stronger bearish candle closures below the previous bodies. This is not the strongest candle close here. It's pretty weak. If this next candle can continue bearish and break below these bodies, we're still good. This London session's fairly quiet so far too. Pretty weak night so far. I need this 1 minute candle to push down and close bearish below these bodies to show me more seller's pressure and seller order flow entering the market. If it closes as like this is good. I don't want it closing weak bullish, weak bearish again or bullish again. You know what I mean? This is good so far still. This is good so far. If we have it close like this, it's good. In the next 10 seconds. And then if the next 1 minute candle just quickly makes a quick upper wick and then continues down, even better. We don't want it closing above like this. We want continuous bearish candle closures. The new 15-minute candle has no wick, but we're still going to be watching the price action objectively. If this candle closes bullish or weak bearish like that, it's not the strongest price action confirms. If it still closes bearish, at least it's still all right. The 15-minute has no upper wick, but that doesn't mean we can't melt all the way down first. I just want to watch this price action here. If we can still have consecutive stronger bearish candle closes, it's still looking good. This isn't the strongest bearish candle close here, and I want to be mindful of this price sensitivity area. I wish we had a lot cleaner price action. Yeah, this is a pretty weak close here. The next candle could push up bullish in my opinion, but I would prefer another impulsive bearish melt. If this candle closes bullish, then we're gonna range back up. I want continuous bearish candle closures. The next area I'm looking to break below is here and get bearish candle closures below here. See how this candle now, if this closes bullish, gold's just going to go push up now above 1725. At least it's closing weak still, but there we go. Hey, I spoke too soon. I thought the candle said 1 second left, but it said 13 seconds left. This is not the strong. Yeah, see, we're almost getting a bullish candle close here. We had 1 week bearish candle. Now this bullish candle. It's still a weak bullish at least, but I need this next candle here to melt. I need this next candle to engulf bearish and close below these wicks. If it doesn't break these lows right now, then don't touch gold. Yeah, see? See how I told you guys if this candle closes bullish, we're going to go back up to here? That's the price action reading. So this was not the... See how I told you guys if this candle closes bullish, there's higher probability that we're going to push back up to retest the same area again? Stay out of gold for now. We don't have clean sell confirms. I also don't want to buy just because we've been respecting this bearish structure still. So no safe confirms still on gold after that candle. It's slower night so far as per the volume and volatility. But did it make sense with this price action when we're looking at that 1 minute candle? One guy said, I told you bullish is up. You know, gold just fell like 100 pips overnight. And this is the one move. This is what you said I told you? From 1724.5 to 1725. This is what you said? I told you? I'm just describing the price action to tell you guys either to extend trades or to not hold trades. And I also don't see safe buys on gold unless we break above here. Because this is still the previous low point where we could just range and bounce around here, then come right back down. All right. So right now we're not going to touch gold. I don't want to jump in gold sells or gold buys. Our gold sells were looking good up until these two candles. Then with those very weak candle closures, it looked like we'd have higher probability to go retest 1725. Okay? That weaker bullish candle close, that first of all, this candle closing above this range wasn't the best, but at least it closed bearish. This one closing weaker was not a good sign, and then this closing bullish was when I told you guys this is not looking good. We're going to come back to 1725. All right? So let's be patient here. No confirms for lower time frame entries on gold yet. I also don't want to start buying just because we could easily retest these previous lows and have sellers jump right back in. I have been selling since 1743. I already closed 50%. Should I take profit or let it ride? For your position, as it's a higher time frame position, as long as we don't break below 1735, I would let your risk-free runner continue to ride. Because on gold, when we zoom out into the hourly time frame, if you've been selling since 1743, you can see this break of intraday bullish market structure and intraday bearish market structure forming, as well as coming below that price sensitivity area to the left. So even if gold does an aggressive pullback to 1733, 1732 area, if it doesn't break that price area, you're still good to extend your sells down. It would just be a pullback like we see in gold do. You know what I mean? Yeah, there's nothing we can do with that price action. It's just that the sells did not look valid when we were looking at these candles here. It was still nice how we rejected bearish structure. It was nice how we came back below the structure. These weren't the best price action confirms there. I'm just telling you guys how I read price action, because that's how I would trade manage as well. I would have done the same thing as you guys, where I take the entry, and then as I'm watching price action, as soon as I see this, I would exit my entry because of what I told you guys, higher probability to come back to the 1725 with that weaker bearish price action showing me seller exhaustion and buyer's pressure there. Okay, let's look at GJ here. GJ showing us some more buyers momentum. Don't enter yet. We still need the break above 150.8. New 30-minute candles coming up. GU's breaking above these 1-minute highs, but we're waiting for 378. Euro USD, nothing yet. Yeah, nothing yet. Gold's not looking good unless it comes back below 1725 in my opinion, and unless we have stronger bearish engulfing candles, and we need this type of sequence of events. Like when I'm telling you guys to look at the price action, you need something like this or something like this. You can see you didn't have that here. You didn't have a continuous sequence of bearish candles and then just one bullish candle, or these minor pullbacks. You didn't have these stronger bearish engulfing candles. You know what I mean? So just stay out of gold sells right now and don't force it. I'll tell you guys when gold sells are looking better, and gold buys would be safer above 1727. That's around the previous low point. Right now, gold is just starting to range on the 1 minute, going up and down. It's been going up and down here over like the last 30 to 45 minutes here. So when we get more price action confirms and come back below 1725, I'll let you guys know, all right? I say we start focusing on GJ now, because it looks like we're about to get the impulsive entry, potential breakout entry above 150.800. So I want to clear these 1 minute highs above 150.800, either the breakout and then a slower pullback in continuation, or the break above an order block created in continuation. All right? Don't start entering GJ until we come above 150.800 with those price action confirms. GU, same idea. We need to clear this 1 minute high and above 1.37800. At least with the GBP, that UK GDP figure was on the good side, more on the neutral to the solid data side. You know what I mean? And as per a fundamental points, we still have market optimism holding a lot stronger. I feel like we might get the GJ set up in the next 30-minute candle or through the 4 a.m. Eastern candle. Even when we're looking at the dollar movement standalone, still very indecisive, ranging up and down. Look at the last 40 minutes on the dollar, just gone up and down a few points. Right? Our global stock markets are still bullish, but US 30, we're not taking buys unless we come above 33,800. Also, let's start looking at this. if we break above here, just send me a message. Then I'll start telling you guys for entry points. All right. It looks like the next 30-minute candle, we might get a squeeze above 33,800. But as of right now, we're still rejecting there on the dot, on the 1 minute time frame here multiple times. So you don't want to enter too early and get caught in that. All right. I'm just going to zoom in here as we're coming into the new 30-minute candles right now. And there's gold. This is why I didn't want you guys to start jumping in sells here either, somebody was saying, just because we're getting more of an aggressive pullback here. But this pullback could just go to retest this previous price sensitivity area when you're looking at these previous lows, and then have sellers jump right back in the market. So I wouldn't be looking for buys unless we came above 1727, and then that's a 40 pip range back up to this medium zone. I'm still in a seller's bias on gold, mainly looking for pullbacks to better sell points. Remember guys, our gold analysis is, even if we got a pullback to 1732, like we're looking at the intraday 1 hour structure and previous lows, that's just better risk versus reward sells. We were just watching the price action as we were potentially breaking below 25, but we didn't have good bearish price action confirms in the lower time frame for actual sell confirms or to extend sells, right? We didn't get the sequence of events that we wanted for cleaner sells. But it does look like we're going to get our Euro USD, GBP USD, and GJ buys tonight if we patiently wait. Be patient. Everybody has to be patient. Don't overtrade. Don't over leverage. Don't try to force trades for no reason. Gold wasn't set up yet. New 30-minute candle that just opened up and is a minute in. You can see the 30-minute on gold. See how the 30-minute pushed up first and made that upper wick, and see exactly where it's rejecting so far as well is that price sensitivity area, right? So this 30-minute could come right back below 1725. I'd only be taking buys above 1727 and sells back below 1725. I'll tell you guys we have the price action confirms for that. Now, GJ is still respecting lower time frame and intraday bullish structure. We still had that last 30-minute candle close very weak. This 30-minute candle is pushing down first without an upper wick. If this can just be the liquidity grab, and then we can push back above and make that upper wick and come above 150.8, we're still waiting for those safe buys. All right? Remember, if price does not come to our significant price points of interest, we're not executing any trades tonight. If we don't get the price action confirms we need, we're not executing any trades tonight. That means it'll be a no trade night. I know it's shocking, it's crazy, right? We can see that global stock markets are still very bullish. UK stock market is still very bullish. We can see Japanese yen and the dollar are still relatively flat. Gold don't touch yet. GJ don't touch unless we come back above 0.800. We're just going to patiently wait. No, gold we didn't. Gold just because we come to a price point of interest doesn't mean you instantly start entering. You have to have the price action confirms at that price point of interest. All right. So when we're looking at gold starting to break below 1725, does this price action show you guys a lot of sellers pressure or a lot of sellers volume? Or are you seeing weaker bearish candles, a mix of bullish candles, a lower time frame support being formed, and a lot of indecision, right? So even though we came below 1725 temporarily, we didn't have the price action confirms to actually hold those sells or extend those sells, right? We didn't have continuous clean bearish impulsive candles. We weren't breaking previous lows. We weren't having weaker bullish candles. We were actually having a lower time frame support and indecision area being created. Now on gold, I'm watching this order block to the left. I would only be looking for scalp buys just as a pullback above 1727 to 1732. Only if you break above this order block. Because now we're starting to validate some exhaustion at these lows. We're starting to notice weaker US dollar, and we were expecting that pullback anyways. You know what I mean? But we're just reacting to that order block area on the dot right now. And GJ, we're waiting for either a pullback to 0.500 or the breakout above 150.8. We haven't had any price action confirms for clear execution on anything yet. You know what I mean? Jacob. Gold's at a bottom? Gold is at a bottom, Jacob? Oh no, that's why you're in the YouTube chat touching your cock listening to me, and I'm the one actually guiding hundreds of people or thousands of people through actual trades, analysis, and information. If you think gold is at a bottom, you must be a mental fucking retard. Gold's at a bottom, eh? Gold's at a bottom. You must be sitting there in your mom's basement in your dirty ass t-shirt with mustard stains and your disgusting ass Fruit of Loom underwear with shit stains, jerking your dick to tell me gold is at a bottom right now. Your account's at a bottom. Your life expectancy is at a bottom. Your parents' hope in your success is at a bottom. Those are the only things that are bottoming out. Alright? Gold's not at any bottom here. Just because it's a little bit bearish here, or a little bit slowing down here, doesn't mean it's at a bottom. Alright? Just to give people that little bit of a wake-up call, humble them a bit, wake them up a bit. Gold has actually been respecting this pullback bearish corrective structure since March. Alright? It's fucking retards, man. Yeah. All right, GJ, let's see how GJ reacts to these 1 minute lows and the bullish market structure. We didn't get any confirms for buys. GU no confirms yet. Euro USD we're getting potential confirms soon above 1992. US 30 no confirms yet either. Jacob just got turned into a full retard. You know Jacob's been trying to buy. You know Jacob is the type of guy that every single bottom, every single support he buys. Then he's up 20 pips in profit and then down 100 pips in fucking drawdown. Right? It only even made this low tonight. It's even been dropping since the start of the week. It's been dropping. This guy's a full fucking retard. Every little support Jacob's been trying to buy, and then he's getting angry when he gets stopped out. This is Jacob's 15th attempt at a gold buy this week. And it's only Tuesday. It's only Tuesday. It's only Tuesday. This is his 15th buy attempt. He's hoping this is the bottom. He's hoping this is it. Finally, this is the... He tried over here. You know he tried it 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 here. He's hoping this is finally it. You fucking full retard. Poor guys like Jacob, you know? Get roasted. Only come here to get roasted publicly. Only get roasted here to get... Only come here to get roasted publicly. GJ, we're going to watch these reactions right at the bullish market structure now to see if we start creating a flat candle body support. Jacob, send us your gold trades from today. Message me here. Send us your trades. You know how I showed my trades from last week? Send us your gold trades on Telegram and prove us wrong. Send us your gold trades. Show us the live account. Show me right now. Let's see. Send it. Prove everybody wrong right now. You got 1 minute, 60 seconds to message me on Telegram a screenshot of your live account and a screenshot of all your trades taken this week so far or even last week. Let's see it. Let's check it out. Put your money where your mouth is. 60 seconds. You hear me right now. You're already sweating, panicking. Don't pretend you didn't hear me right now. You just sent a message about where your entry was. Send it. Send it. I'm waiting for the full send. If you prove me wrong, I will openly say, Jacob proved me wrong. I don't want to see a FTMO account. I want to see your own money. Oh shit, GJ here coming to 0.500 on the dot. Let's watch. If we break below, then we're going to adapt accordingly. Otherwise, we're still chilling here. But yeah, send it. I'm waiting for it. I'll be waiting for the Telegram message right here. 60 seconds. You should have already sent it by now. You should have already sent it by now. What are you waiting for? 30 more seconds. Otherwise, you're going to be doing some fishy shit. Alright, GJ. We didn't break above 150.8. We didn't break this previous rejection point. We didn't break this price sensitivity area. But I'm not looking to sell GJ because I feel like we could get an aggressive bounce in this area and come above 150.5 again. Alright? If you guys rewind this stream, if you guys watch any of the past streams, I've been showing trades, whether it be penny lots or 10 lots, since I first started at 2019 period. You know what I mean? All I'm asking you to do is show a couple of days worth or right now. Your time is up. How come you haven't messaged me, Jacob, with these great trades you're talking about? You got Telegram. How come you didn't message me? Where's your message? That's what I thought. Don't go try to go Photoshop some shit now. I know your armpits are sweating. I know your forehead's sweating. You had to wipe it. I know you're panicking of what to say right now to try to cover your tracks. But there you go. Point proven. GJ, obviously we're not going to be touching buys right now as we're breaking below 150.5. And I don't see any safe sells yet. Bro, what the fuck is this? You're the guy giving us advice. You've been break even for 3 months, my guy. Get out of here, you hyena. Get this vulture out of here. But you know what? I gotta give you props for sharing. I gotta give you props for sharing. But like, why are you talking about liquidity grabs? Why are you trying to give people advice? You've been fucking going up and down like a seesaw for 3 months. All you've been doing is paying commission to your broker, stressing out, wasting your mental energy, wasting your time, and going up and down for 3 months. And also, I don't want to see the 3 months. I want to see what you did today with gold. I want to see your gold buys today. I want to see your gold buys today. Where's your gold buys today? Fair play. Before anybody in the chat roast Jacob, first of all, everybody in the chat give Jacob props for at least messaging me and having the balls to share it. No sarcasm right here. That's number one. I am giving Jacob a round of applause for openly sharing, at least sharing it. At least he sent it. At least he had the balls to send it. No cap, no lie. That's number one. But the reality is, why the fuck you telling me what's right or wrong, buddy? Now we gotta give you the reality. What the fuck you doing here, bud? Why you telling me what's right and wrong? Why you telling me? Why you telling me about gold efficiency or inefficiency? Why are you telling me about, oh, I'm trying to sell at the bottom, buy at the top, blah, 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 without even knowing? If I did 25K in a week and a half, and I could show the full wins and losses, and I could show it when I was up 5K, then I sent it when I was up 12K, then when I was up 20K, and if I've been doing that since 2019, even when I was, you have to understand, bro, not to be a dick, I was making the profits you're potentially making now, or potentially looking to make. You have to understand, I was making the profits you're looking to make in 2019. I'm not trying to do this to flex on you. I'm not trying to do this to say I'm better than you. I'm just trying to say, why the fuck are you trying to come talk shit to me? Why the fuck are you trying to tell me what's right and wrong? Why are you telling me when I showed my progress live accounts from penny lots all the way up until accounts now, or to 25K now? You know what I mean? Because I'm going to tell you right now what nobody else is going to tell you. Hello? Why are you telling me about gold buys and liquidity grabs and stop loss hunts? Instead of having such a large ego, take a step back, understand that your trading is in a seesaw position right now, or you've been pretty much been running on the spot. You haven't moved forward, you haven't moved backwards. The good thing is, I hope you haven't lost more money than you have deposited. The first thing I'm going to do is give you props for sharing your information and at least messaging me and openly sharing. But to be talking shit to me when I'm just coming here doing a free stream, giving analysis, sharing my perspective on price action, sharing fundamentals and news headlines, sharing different trade ideas across 10 different pairs, and this is how you trade, you look like a fucking caveman retard right now. You know what I mean? I can see why you came into the stream to talk shit. Cause you're angry, you're frustrated. And I know why you're angry and frustrated. It makes sense. God damn, GJ just give a quick retest of 150.5. We weren't paying attention. We might be able to adapt to some scalp sells if we break below here and stay below 150.5. But other than that, I would prefer the higher time frame buys. Nice one, bro. Good job. Yeah. That's just extremely disrespectful. You come here talking all that shit, and that's what you gotta bring to the table? And you have to understand, the people who are talking shit, these are free streams. You know what I mean? You could just click X and not watch it. If you don't like my voice, if you don't like the information I'm giving, these are free streams. So you're telling me that wasn't a liquidity grab? Get the fuck out. I'm telling you, you're a garbage trader. So it doesn't matter if gold goes up 100 pips in your favor, or if it goes down 100 pips in my favor, you're still gonna be in fucking losing at break even. But you're not getting that through your brain. has nothing to do if gold goes up 100 pips now, or if it goes down 200 pips now. The point is, you're trash. That's the point. You're dog shit. So, whether it goes up and you make some money today, you're gonna lose it next week. You just showed us that. You just showed us the proof. You've been going up and down on a fucking... You've been jumping up and down, running in the spot for 3 months. And that's just what you showed us. That's probably been going on for the last year. You know what I mean? If GJ creates a double bottom here and a little order block, and then comes above 150.5, we're taking high risk buys. Because that's still our high. That's still our buy. We're still in that high risk buy option. You know what I mean? No, I was telling people if we have the price action confirms below 1725, we're gonna continue to play the sell structure. You know what I mean? But there's no reason for me to continue entertaining you. I don't even want to entertain you anymore. I feel bad after you sent me your fucking trade report. You know what I mean? So, like, I just feel bad after you sent me this. After you sent me this, you can talk as much as you want. I'm just gonna, anytime you make a comment, I'm just gonna show this. You know where you would have made more money, bro? You know what? You know where you could have gone to make more money? McDonald's. Your local corner asking for change. At the end of a highway exit. Selling newspapers. Buying and selling dirt. Taking a big fat shit and finding some person who's into that fetish and potentially selling your shit would have made more money than this. Mowing grass. Shoveling people's driveways if you're in a snowy area. You know what I mean? Over 3 months, if you worked at McDonald's part-time, you would have made a lot more money than this. That's just the math. Yeah. Sorry to say it, but maybe no one else will tell you that reality, but yep. You know? Over 3 months, you could have been going to garage sales like Gary Vee. You could have got a job at McDonald's. You could have just been a drug dealer selling weed. You could have been mowing lawns. You could have just asked your mom and dad for money. You could have just said, "Hey, mom and dad, can I get $200?" And then you would have made more money than here for over 3 months. You could have cut back on some of your porn subscriptions. 3 months of 3 months of saving on Pornhub Premium. That's about $150 right there. you would have saved. But it's all good. I'm just trying to give you some financial advice there to save you some time, money, effort, stress, energy. You could have spent more time and effort just at a simple job following some mundane instructions. You know what I mean? If GJ has candle closures below these 1 minute lows, it's going to go straight to 150.2. Tonight, we haven't seen anything to execute on yet. There's not been anything to execute on yet, in my opinion, on GJ or on gold. I haven't seen anything favorable. Yeah. US dollar is still ranging up and down in this consolidation zone. It has been in the entire week. I didn't take shit today. I'm not trading today. I'm not trading for probably like a week, maybe this entirety of this week, unless we get some clean probability confirms. Sorry, high probability setups and the confirms needed that we look for in Capital Hungry. GJ is starting to look messy. Gold's getting messier, like on the intraday time frames. The US dollar's been ranging. GU will be easy buys above 378. Euro USD will be easy buys above 192. GJ will be better buys at above 0.500, or even if we come to 0.200. But right now, it looks like once we break below this low, it's going to start digging deeper here. Gold, we were just looking at how we were reacting at the low, but we're still waiting for the pullback. You can see on the lower time frame, this bearish market structure is still being respected, where you're having impulsive sellers in just these pullback phases. So even if we come up to 1732 and we don't break this area, as per the analysis at the start of the night, still respecting that bearish structure, you know? And see what I was talking about on the price action with the GJ, where it broke below 0.500, retested it, and then you're having the candle closures below these previous. This is the type of price action that we needed on gold when we, you know what I mean? But it was just too slow. No, we don't have any really high impacting headlines. We have the UK economic data at 4:30. We just have to be mindful of. Yeah, because markets were a bit slower and we didn't get any clean trade ideas to execute on tonight. That's why I was just more bantering. The safer GJ sells would be below 150.200 to start revisiting these previous lows. Right? You can see we're coming right to 0.200 like we're talking about. When we were talking about the 1 minute price action and how we broke and retested below 150.5, then had candle closures below these lows. Did anybody take that impulsive sell scalp when I was calling out the price action there? Yeah, quick sell scalp. I'd be cautious because of new hourly candle, but the price action is looking good below 150.5 here, you know? It was pretty quick, nothing crazy though. It was a very impulsive, quick sell scalp. Nothing crazy. We have the new hourly candles. If the new hourly candle does a pullback to these lows and doesn't break higher, we could take potential further sell scalps down to 150.2. We have the UK manufacturing data at 4:30. Yeah. What's this? Gold? Yeah, below 27, below this order block would make sense too, but I would be waiting for the new hourly candle. If the new hourly candle doesn't break these previous lows and then we come back below 1727, then we can start targeting these previous lows. That makes a lot more sense. Yeah. High risk buys at 0.200. If we come to 0.200 and create a double bottom or lower time frame support, then we could see some high risk buy scalps from 0.200. But let's see how we react when we come down here first. You know what I mean? So yeah, if we come down to 0.200 and create a lower time frame support and a potential double bottom, then sure. You know what I mean? Still selling gold, I see. Still making less money than a minimum wage McDonald's worker, I see, over 3 months. So, who's really struggling here? Think about the fact that you could have put on a McDonald's hat, flipped a few cheeseburgers, said goodbye to your supervisor every day, and made more money than what you did trading for 3 fucking months. That's 90 days you were trading. 90 days every single day you were trading. Just go put cheeseburgers on the fucking grill, man. This is the new hourly candle, by the way, everybody. Now, this hourly candle has already created a significant lower wick at these previous wick rejection areas. We did have a very nice bearish engulfing candle close. The safe buy still wouldn't be above 155, 150.5. We're still in that potential adjusted sell scalp bias if we remain below these 1 minute lows and 150.5 to go down to 0.200. All right. We're still having stronger bearish candles or more consecutive bearish candles, minor pullbacks or weaker bullish candles. Even this is still weaker bullish candle pullbacks, stronger consecutive bearish candles here. It was just a new hourly candle opening up. Yeah. Delvin, who's this catfish? That's not you, fam. Some K-pop star. Nah, what's this one? All right. All right, now here we're starting to show some sellers exhaustion, but if we get bullish candle closers above these wicks, we will get more of an aggressive pullback back to these previous 1 minute lows and potentially to 0.500. You want weaker bearish candle closures and more engulfing bearish candles to break below these candle body lows and come to 0.200 if you're still in those sell scalps, like if you're looking to extend those sell scalps, you know? I'm getting a bunch of questions about people asking how to contact me. All the capital hungry contact information is on the layout itself on the YouTube screen and within the YouTube description. It's also in the YouTube description. Make sure you guys like and subscribe and watch all these educational videos for free on the YouTube channel itself. I recently uploaded a swing trade analysis for Euro USD. These have been some great rant webinars on just the current state of society. And then you have tons of educational webinars, whether it's scalping, day trading, psychology, everything in between from fundamental concepts, all here on the YouTube channel. You also have the Capital Hungry News Twitter, link here, which posts news headlines throughout the day and night. Forex Factory has been sourcing from us as well. It's not as many news headlines as the news terminal. That's for private channel members only, but it's still a great free resource. And the Capital Hungry free Telegram analysis channel and the Capital Hungry BitClout page. All right. If you want more than that, then you have to sign up for the Capital Hungry private channel. That's where you get access to all of the educational webinars, which is in the educational webinar vault. You know what I mean? And you have, and the private channel, those members get access to all these educational webinars. Fundamental concepts, technical concepts. Right? Psychology, fundamentals, technicals, anything I've learned over the last 4 years that I actively use in my trading is there for the private members. The first thing you got to do when you sign up for the private chat is go through all these educational webinars and make sure you have a good understanding of everything taught and all the concepts used. Risk management videos, technical videos, fundamental videos, trading psychology videos, and everything else in between as well. All right. In the private channel, you get access to our daily London Zoom sessions. You get access to higher time frame swing trade ideas, intraday day trade ideas, political event reports, weekly economic event reports. Every week, I send out a weekly refresher and recap webinar, mentor reminders. Every start of the week, we start out with mentor reminders, a weekly refresher. This is before markets are even open. Reviewing a psychology webinar, any of your key headlines over the news, your economic calendar, your political events and speakers, your investor behavior analysis, then your intraday trade ideas webinar, where all the webinars are obviously uploaded and shared on Vimeo. Then we do our London Zoom sessions throughout the night every night. Higher time frame analysis webinars, that's in the main feed. Then within the trade room, you have access to the Capital Hungry Price Monitor, which just sends you price updates every 2 hours on the main pairs, currencies, cryptos that we look at. You get access to higher time frame key level price alerts that get directly sent to the chat. You get access to session reminder alerts about when sessions are opening and closing, and mentor reminders alongside that. You get access to the news headlines in the Capital Hungry News Terminal room, which is just like having a news terminal alongside everything else offered. You get access to other members in the community sharing their analysis and trade ideas across pairs, higher time frame, lower time frame, scalp ideas, swing trade ideas. You also get access to the newsroom, like I'm talking about, as a solo individual channel, and the Capital Hungry Banter chat, where you just can keep company with other traders, ask questions, share memes, share news headlines, fundamentals, trade ideas, trades you took, anything else banter-wise goes in that chat. The trade room, this is like the Capital Hungry trading pit or the trading floor. There's only price alerts, the market monitor, other members sharing analysis on main pairs that we look at, news headlines, me sharing chart updates or information, market updates, the session reminders, and there's in the trade room there's only pure fundamental, technical, psychological trading information. There is zero noise in here. You know what I mean? Anything you read in this trade room is going to be something that's going to bring value to your trading, whether it's a piece of information, a chart, a webinar, whatever it may be. You get what I'm saying? The main feed is only where I send main information. Webinars to watch, main points to look at, the weekly recap and the weekly flow, all the headlines. And this type of flow, the private chat will tell you right now. They'll tell you right now, I have not missed a week besides a week where I took a vacation, but I froze everybody's membership. Right? So within the Capital Hungry private chat, we have been following this systematic approach week after week, every single week. Zoom sessions, every single London session, unless something really comes up. Intraday market updates, higher time frame analysis a few times a month or every quarterly period. Fundamental updates, technical updates, the weekly flow, the investor behavior analysis, the political events, the economic events, the news headlines, the trading psychology. It never ever ends in Capital Hungry. It never ever ends. There's no clickbait, there's no direct signals, there's no following some singular Fibonacci strategy. It's teaching actual concepts after a ton of trial and error and back testing, fundamentally from a macro perspective and from a micro perspective, alongside back tested technical concepts as well. No indicators, no cookie cutter course, nothing like that. You know what I mean? And you have to understand that Capital Hungry usually only keeps about 250 to 300 to 400 members total, and it's a subscription-based service. People pay month after month, and a lot of the traders involved have been here since the start, paying month after month due to the productivity regarding the environment and the traders involved in the environment, all the content shared, the accuracy of analysis, and just the information day after day, right? Because people are always asking, what's involved, what's in Capital Hungry, what do you get? Like, it's a lot to talk about. You can watch this you can read here. You can also watch these videos here. You can also look at this Capital Hungry introduction video as well in the free analysis chat that'll tell you exactly how the channel works before you even get involved in it. But I'm telling you right now exactly what you get, exactly what you pay for month after month. And members in the Vimeo, members in the private chat will tell you, after you actually watch the educational webinars and then you actively become involved in the Zoom sessions, it's fairly, I don't want to say easy, but it's high probability that you're going to make back your monthly fee. As long as you're actually following good risk management and the psychological reminders, the trade analysis and everything shared, it's very high probability through the 20, either the 20 London sessions that are going to happen throughout the month, or the 10 different intraday trade idea webinars, or the 10 different swing trade idea webinars, that you're going to make that back, you know? But yeah, for anybody who asks and you keep asking about contact information, it's all right there. Capital Hungry Twitter, Capital Hungry Telegram, Capital Hungry YouTube channel, Capital Hungry BitClout, Capital Hungry private channel is capitalhungry.com. Right now, there's a promotion running as well. You know? There's a promotion running where usually it's $110 US for 4 weeks. But right now it's $110 US for 5 weeks. So you get an extra week for free. An extra full week of analysis, 5 London Zoom sessions, trade ideas, news, everything that I talked about. All right, so let's check the analysis here and update what's going on here. We're still remaining below these lows. We had this strong sell for about 20 pips to revisit this price sensitivity area, but we're starting to notice exhaustion at these lows around 1725, 1726. If we break above these 1 minute highs, there's higher probability we're going to get that pull back to 1732. The safer sells are still at a retest of 1732 or potentially below 1725. Potentially at the new 4-hour candle. This, to be honest, this London session's been pretty trash. It was a pretty weak London session, you know what I mean? GJ, like I was telling you guys, is giving us that deeper pullback, going to revisit these lows. If we start to notice stronger bearish impulsive candles, we will have sells right back to 150.2. All right? It's giving us that pullback we're talking about. Yeah. Capital Hungry is not a cookie cutter course where you're just going to learn some indicators or Fibonacci or some basic shit like that. It's not a place where you have to worry about paying some one-time fee of $500, $1,000, $5,000, and then you pay it and you regret it after, you know what I mean? Hey guys, every time you guys see Jacob Lee comment, remember that this is his trading account. This is his gold profit today. Buddy, wait a second. You're telling us why we selling gold. What the fuck? Wait, what was all this today? What was all this today? Oh, that's not today. Is it today? Yeah, it is. No, it's not. Today. This is today. What's this today? Look at how many times you've been trying to buy, bro. Remember what I said, Jacob? Hey guys, remember when I was saying that joke? That Jacob tried to buy here, that he tried to buy here, that he tried to buy here, and now he's buying here? Look! It wasn't even a lie. Look at his trade. Look at his trades. 1741, 1735, 1743, 1733, 1725. You've been trying to buy at every single fucking support, praying that this is the one that finally goes to the moon. You've been buying at every single fucking little support you see and losing over and over again. This deposit that you put in this week, you lost it. Plus another $40 on top of that, what you could have used for lunch or your bus money. Your trading psychology is so dog shit. I can see why you're coming to troll this chat. You know what I mean? I feel bad for you, bro. You know what? You're right, bro. I'm a loser. You know what, guys? Jacob, everybody tell Jacob he's right. Let's give Jacob a little confidence boost. He needs it, guys. Everybody in the chat, tell Jacob, you're right. You're doing good, Jacob. Let's give him a little boost. Don't worry, Jacob. Even though you've been trying to buy gold for the last week and lost your deposit, you're doing all right, bro. Keep your head up. Bitcoin's ripping it, eh? That Bitcoin buy analysis from 58,000 has been running very nice. New highs printed. Cool. Very nice. GJ, I still want to see how we react at 150.5. Tonight, I did not take any trades. I did not advise anyone to stay in any trades or enter any trades. I did not see anything clean enough as per the price action or the market structure or the micro fundamental headlines. You know what I mean? So because of that, I did not feel confident enough on telling you guys to execute on anything. The only trade that I said could play out was the sells below this low, which only went for like 5-10 pips. Another potential trade is gold is GJ sells again coming up down to 0.200. If we still remain below 0.5, and if we come below these 1 minute lows here and remain below it. But other than that, I did not see anything. Oh, sorry about the flashbang there. But other than that, I did not see anything favorable tonight to execute on. It was a pretty choppy night. It was a pretty choppy night tonight, you know? That's why I was more just wasting time bantering with you guys. That's why I was spending more time just bantering with you guys and just shooting this shit tonight, you know what I mean? Not stressing out or wasting energy jumping in trades in and out, not fighting the markets, not trying to force a trade that's not there, not breaking our plan or our pre-planned trade ideas. Just nothing to really execute tonight, you know what I mean? Bitcoin fresh highs at 62K. Why was this? What's this half-ass headline? But did it make sense for that little GJ pullback as per the price action though? Weaker bullish candles, stronger bearish candles coming in now. Obviously, if you took any of those, or are in any of those sells, you have to watch these previous lows created. You need to break below here to extend to 0.200. And we have that UK data in 10 more minutes. The manufacturing data we'll watch. GBP USD is just ranging. We're not touching. Euro USD we didn't touch. It just ranged up and down all night. US 30, we're only taking buys above 33,800. It also didn't do much tonight. A very quiet London session. Gold, we're going to let it do its pullback to 1732, 1734 and watch accordingly. Nothing fair to execute on gold yet. Yeah, the YouTube audience, those trolls, yeah, the YouTube trolls, they do get annoying and they make it like they make it not appealing to do these streams, but like it's whatever for me. That's one of the reasons, if you guys notice, why Monty was taking such a big break, why Seed also took a break, is because the YouTube audience is extremely toxic, right? Which you guys know I don't mind too much, you know. But that's why a lot of these London traders are not a lot of these London streamers. They're not streaming as often, or you're seeing them take more breaks. It's because one, the bit of audience that they do have doesn't actually show any support or give a fuck. You know what I mean? Because they don't actually like the stream or share it around on their social media. They just keep it for themselves. Two, the trolls in the chat make it unfavorable because one, you have an audience that's not showing a support, and then two, you have a bunch of trolls coming in the chat. Three, it's a free stream where we're sharing information that most people are paying mentors for, and people are still arguing about it or trolling or bringing nonsense to the chat. And four, we, the ones who are running the streams or who are already finding some success trading, or are the ones who have the confidence to share information, we already understand the psychology of the 99% and why they're angry, why they're being trolls. It's because they're losing. You know what I mean? Yeah, Raja gets a shit ton of views, and he doesn't care about that trolls and shit, but he's been streaming for like 3 years now, you know what I mean? I just started streaming this year. But I don't mind the troll stuff. I usually just entertain the trolls and talk to the trolls because it doesn't impact me. Negativity, or the day-to-day negativity, that impacts people, or people say, oh, that's so negative, that's toxic. It doesn't have any type of negative impact on me. It doesn't impact my trading. It doesn't impact my business. It doesn't impact my sleep, or when I close the stream, I don't think about it after that. I don't even think about it a few minutes after I read the message, you know? But what I am going to share with you guys is the YouTube audience is extremely toxic, in the sense that people can't even do their 2 cents of at least sharing the information around. You know what I mean? Or liking the stream or subscribing. So that's why a lot of these YouTube streamers are starting to take more breaks, or slow down, or not wanting to stream as often. You know what I mean? Yeah. In reality, I don't have to do these streams as often as I do them. I only do, to be completely honest with you guys, the only reason I do these streams is to create exposure for capital hungry private paid services, and also to give back content, because I understand how hard it is when you're a new trader to find genuine information. But over the last couple of months, Capital Hungry has already been sustaining 300 to 350 active paid members, right? Which is the amount of members I like to keep anyways. So I already have individuals and clients that are paying for information where I'm doing daily streams with them anyways. So like if I choose this week or for the next month not to do streams anymore, it has no impact to me. I can come back to YouTube whenever I want. If Capital Hungry's exposure starts to decrease, or if members start to die off and Capital Hungry expenses are too high, and the profit from Capital Hungry is no longer worth the expenses alongside the work I'm putting in, I can either shut down Capital Hungry and just start trading myself alone and minding my own business, or just start advertising more on social media and showing my brain out there again. As soon as I put my brain out there, there's going to be people that go, wow, this guy's smart. He knows his shit. I'm going to go see what he's about. I'm just being honest with you guys. I'm not going to tell you guys some fake information or say, oh yeah, I have this service because I want to see everybody make millions of dollars and be successful. No, I have this service so I can make more money and have another income coming in, and also as a byproduct help people out and teach them the right things regarding trading from what I learned through trial and error. But to say it's the other way around and money is the byproduct, I would just be lying to you guys. You know what I mean? That would just be some unrealistic lie. Like, oh no, I don't do it for the money. I do it for the love. Like, come on. I'm not going to lie to you guys. Everything is a business. Everything has a cost in our life. Everything has a risk for a potential reward. Whether it's a monetary risk, a time risk, an emotional risk, a knowledge risk, whatever it may be. You know what I mean? That's just the reality of the world. If Capital Hungry didn't have enough members, and if it didn't make enough sense regarding how much I pay for the expenses per month and the amount of work I do, I wouldn't be running it just for the love of trading. I would just be trading by myself. You know? Anytime Capital Hungry has had an increase in price, members are fully aware of why it's happening. What's the reason behind it? What value is being added to back up that cost increase? It's not just, oh yeah, fucking we're going up to $200. It's like, no, we added a news terminal. We added price alerts. We added more weekly London sessions. I'm involving more of my time. The Capital Hungry expenses increased. Hey guys, hey clients that pay for the service, this is what's being added. This is what's being added as per the scales, values, and resources. This is what the price is going to be up to. You know what I mean? Nothing has ever been in the dark or come out of the blue regarding Capital Hungry or how it's ran or how I run it, you know? You know how many people would join me just because I sound smart? Enough. That's why Capital Hungry private channel it has a member limit. Because when you have too many people in groups that are one, uneducated, two, have false expectations, then it completely destroys the productivity of that entire group or community. It just ends up being very toxic, ego-filled, a loss of information, and a bunch of noise. So once Capital Hungry reaches 350 to 400 active members, I close the website for signups. As soon as members leave, then I open it back up again, because it's come and go as you please. It's a monthly subscription base. Maybe 1 month you're going on vacation. Maybe you're taking a couple months off trading. Maybe you just don't like the service anymore. Maybe you are just becoming a self-sufficient trader yourself. That's why I made it subscription based. There's two reasons of why it's subscription based. One, it gives incentive to me to continuously keep content at a certain quality and continuously keep that effort, right? And two, it gives incentive for the members that if you don't like the content, if you don't like the service over the 30 days, you're going to cancel and never come back again. And if you do like it, you actively choose to stay. You know what I mean? Nobody can ever feel like they got scammed. You paid that $100, $3 a day. You were there for 30 days. You got everything you paid for. You know what I mean? But yeah. Nobody has to join if you're not ready to join, if you don't have the funds to join. But people keep asking me, what's in Capital Hungry Private? What's the difference? What are you doing there? If you already do all this for free, what else is there in the private chat? Like, there's a lot. I don't know what else to say. Yeah, I'm only talking about this because markets are slowing down right now. We haven't had much going on. GJ as well, very weak bearish price action now. Starting to create a flat candle body support. No price action confirms to continue sells down, in my opinion. It looks like we might get a more aggressive pullback for the new 30-minute candle. Gold isn't giving us any clean confirms either for buys or sells. It's just starting to range between these previous lows and the current lows. GJ, no clean price action confirms. GU, no clean price action confirms. EU ranged overnight. The reality of tonight was it was shitty volumes and volatility and a trash London session. We had pre-planned analysis and execution points. We didn't get the confirms needed to execute there. We didn't get to take any trades tonight. Does it suck we didn't get to make any money? Yes. Are we going to stress and force a trade? No. Are we going to try to force a trade that's not there? No. Are we going to break our trading plan? No. Are we going to stress and waste mental energy on things that we can't control? No. We're going to come back fresh the next session, whether it's New York or London. Look for those same trade ideas and analysis and confirms, and if we get the confirms, execute, but at least exert that patience, right? These key fundamental points of Brexit talks being active and watching the newsroom for that are still very much active. Overall, markets are still optimistic from a macro perspective. We're just starting to enter some intraday ranges, even on like UCAD, EU, GJ starting to enter a dirty intraday range. Right? We've already passed the UK economic data. We have the German economic sentiment data at 5 a.m. Eastern, and then US CPI during New York session hours. Don't forget all of your mental reminders. Your stream reminders are on the screen right there. And before I look at the charts and before I go, I'm just going to go to the washroom quickly. And then we have Asian session markets closing in 27 minutes as well as new 4-hour candles. And we're just going to call this session a night in like the next 15 to 20 minutes. I'm just going to go to the washroom and then we're just going to look at some charts that any other members have or anybody in the YouTube chat has. And then we're just going to call it a night. It was a very messy night. I didn't see any clean price action confirms for the gold sells like I advised. I didn't see clean price action confirms for the GJ buys. We didn't get anything that we pre-planned to analyze on. That's the nature of the beast. It is what it is. All right. Capital Hungry Private. I started it after the free channel. The business outside of trading is a furniture business with my cousins, but I was more helping out with that on weekends whenever I had free time. It's more of like a family business. The private channel, the Capital Hungry private channel, original price was $40 a month. And it only started with probably like 10 members, 20 members in it. When I didn't have a news terminal, we didn't have the price alerts. You know what I mean? When I wasn't even earning as much as myself then. I just had, because I started that free channel first, right? And then I had my Instagram and I was posting a bunch of webinars and a bunch of analysis for free. And everybody said, hey, mentor me. Hey, manage my account. Hey, sell me signals. Hey, here's some people were ready. Like, even when I was showing those penny lots back in the day, just because I was showing the analysis, then the trades, then the profit after, and the fundamentals and technicals, people were ready to start tossing thousands of dollars at my face. You know what I mean? But I was like, if I want to create a business out of a trading service, I want to make sure I don't make the same mistakes all these other people made. And some of the major mistakes I saw were having generic cookie cutter courses and not actually sharing any value information, overcharging for information and generic information, and also having large one-time fees, right? People paying, and I found that people always felt like they got scammed because they might pay $500 to $5,000 for a course, and then as soon as they get the course, they go through it and they're like, wow, that's it, right? So Capital Hungry originally started like late 2019 for $40 a month. What'd you say? Gee, you're already the most expensive? You think my service is the most expensive? You know, Daniel Savage sells just monthly signals for more than what I do. Just signals. London signals. IML costs more than what I do. Astro charges more a month than what I do. They're like $20,000. You know what I mean? Here, let me give you guys an example. You know this news terminal to the left? I'm going to describe to you guys exactly why it costs $20,000, and I'm going to tell you guys exactly why, all right? The news terminal is the Reuters icon. If you guys want to sign up for Thomas Reuters icon, you can download it, but to get the online credentials, you have to set up a meeting with a sales rep. And if you want to have news headlines and terminal access that you can distribute to outside others, it costs $2,000 a month. To get access to the data API and to share that information, it costs $2,000 a month. Now, there are other companies like Metastock where this company has a contract with Reuters and they sell just the news headlines, right? If you want to buy just the news headlines for your personal self alone, it already costs $100 a month. If you want any personal economic data, just the economic data, you're looking at $150 a month to $100 a month. What I did is do the same thing that these guys are doing, have that contract with Reuters icon, but also combine it, not just the news, also everything involved with the private channel. You know what I mean? So just to give you guys perspective that if you wanted just foreign exchange data, the news, just for yourself, that you can't share anywhere, right? It's going to cost you $100 a month. If you want global data, Asian markets data, Middle Eastern data, these are extra packages, $150 a month. If you want this news terminal with the API access to share to other people, you're looking at $2,000 a month. All right? You're a lead engineer? No, you're not, bro. No, you're not. So yeah, it's that simple. Anybody, any of you guys can go get this news terminal tomorrow if you want. You know what I mean? Metastock has a contract with Reuters Icon to be able to distribute this information as well through their own business service. You understand what I'm saying? So if you don't want to get Reuters Icon, you don't want to pay that crazy amount, and you want news headlines and news terminal access yourself, you can go through Metastock and pay that fee. If you want just foreign exchange news, it's $100 a month. As soon as you want to add these various packages, this is the cost. And this is the packages. All right? Or in Capital Hungry for $110 USD, you get access to everything. You don't get access to just news. You get access to all of this. But yeah, so those options are there for you guys. If you guys want just a signal chat, Daniel Savage has just a monthly signal chat. That's $160 a month. If you guys want to join a MLM service like IML, you guys can join there. Their base service starts at $200 a month. If you guys want to join Wall Street Academy, we can go check out their costs. Okay, so a one-on-one course is $25,000, and the course itself is $800. So if you want to go to Q Banks in person, you can pay them $25,000. Or you can go pay $800 here. You guys can go pay Daniel Savage if you want for his Savage chat. I don't know what his website is. What's his website? Linktree. Signals. Start. Daniel Savage is going for $150 a month for just signals. 1 month non-reoccurring, $150 US dollars. So yeah, you guys can go ahead. You know what I mean? IML, you guys can go ahead and join here for $275 a month. $25,750. Daniel Savage was $150. IML is $300 a month. Just news headlines are $100 a month. I think Capital Hungry is doing pretty good. I think I'm doing good. You know what I mean? So, hey, honestly, thanks for bringing the price of Capital Hungry to my attention. So now I can show you guys exactly what an individual news terminal will cost you as a retail trader. Also, you can't share this information around anywhere. Like if you pay for this data terminal and you forward that news and get caught, you can get sued. Mohammed, if you can't afford $100, you shouldn't be trading either. You should be working a job. You know what I mean? But at the end of the day, you guys don't have to join me. You can join Q Banks for $800 or $25,000. You can join Daniel Savage. You know what I mean? You can join Lambo Raul. Does he have anything? What's this guy? Signal service. You can join Lambo Raul for $127 a month as well. Same shit. Signal chat. Astro Forex. You can join these guys as well. Let's see, courses. Inquire. I can't, they're not even going to show the prices, it's so expensive. I don't know how much Astro is, but they're not, whenever it says inquire and it doesn't show you the price, you know it's expensive. You know what I mean? Who else? Who else is a big marketer you guys like? Swag Academy, somebody said? What's Swag Academy? This is a Forex? Oh, wow, it is. What the fuck? Swag Academy. Swag Academy. You guys can pay for the Swag Academy. This is fucking fun. Swag Academy's $5,000. Or sorry, $500. Here you get to learn what broker to choose, how taxes work, risk management, how to use Forex Factory or something like that. That's $500 USD for a cookie cutter course. What else do you guys want me to check out? Forex Scalper? The Forex Scalpers, these guys. You guys can also come check out these guys. Their fucking website's trash. Not even loading, man. It does matter your capital. And Jacob, you're break even for 3 months. It does matter your capital. It 100% does matter. Oh, here we go. $500 for this course, euro. $300 for this handbook. Cookie cutter handbook, $500. Cookie cutter handbook, $300. Cookie cutter handbook, $220. The cheapest thing they have is a fucking trading journal for $80, 80 euro. I don't know, man. I feel like this is pretty good. I'm feeling even better about Capital Hungry. You know what I mean? Thank you for helping me. Thank you for helping me compare to other news terminals, compare to other marketers, other signal sellers, other MLM chats. I feel like Capital Hungry at $110 US with a news terminal, with weekly and daily London sessions, swing trades, day trades, price alerts, mental reminders, the community. I feel like we're doing all right. Yeah. But anyways, everybody, tonight's been a very weak London session. We're coming up into the Asian session market close and new 4-hour candles. I'm going to be calling it a night here. Very, very weak London session. Not much to execute on. Hopefully we get better volumes through New York in the next following sessions. I'll see everybody next time. Take care. Make sure you guys like and subscribe. Share these stream arounds. And subscribe for more. Share it around. Like. Same shit I just said. I'm getting tired.